Earning passive income has never been more accessible, and mutual funds are a powerful tool to help you achieve this. Whether you're new to investing or looking to diversify your portfolio, mutual funds can provide steady returns with minimal effort. Let's explore how to use mutual funds to generate passive income and secure your financial future. 1. Why mutual funds are ideal for passive income. Mutual funds pool money from multiple investors to invest in diversified assets like stocks, bonds, or money market instruments. Professional fund managers handle the investments, allowing you to earn returns without needing to monitor markets daily. The two main ways mutual funds can generate passive income are dividends. Income-generating mutual funds distribute dividends from stocks or interest from bonds directly to investors. Capital gains. Funds that focus on growth may appreciate in value over time, offering long-term returns. 2. Types of mutual funds for passive income. To build a reliable passive income stream, consider these types of mutual funds. Dividend-paying equity funds. Invest in companies that pay consistent dividends, providing regular cash flow. Bond funds. Focus on government or corporate bonds, which pay periodic interest to investors. Income funds. Specialize in assets designed to generate consistent income, such as real estate investment trusts, REITs, or high-dividend stocks. 3. Benefits of earning passive income through mutual funds. Diversification. By investing in a mutual fund, you gain access to a wide range of assets, reducing risk. Professional management. Expert fund managers handle your investments, saving you time and effort. Flexibility. Many mutual funds allow you to reinvest dividends or withdraw them as cash, depending on your financial goals. Compounding growth. Reinvesting your earnings can accelerate wealth building over time. 4. How to get started. Set clear goals. Decide how much passive income you want to generate and over what time frame. Choose the right funds. Research funds with a strong history of income generation and low fees. Start small. Many mutual funds have low minimum investment requirements, making it easy to begin with as little as $500. Monitor performance. While mutual funds are managed, it's important to review their performance periodically to ensure they align with your goals. 5. Things to watch out for. Fees and expenses. Look for funds with low expense ratios, as high fees can eat into your returns. Tax implications. Dividend payments and capital gains may be taxable. Consult a financial advisor for tax-efficient strategies. Market volatility. While mutual funds reduce risk through diversification, they're not immune to market fluctuations. Mutual funds offer an excellent opportunity to generate passive income with relatively low effort. By investing in the right funds and adopting a disciplined approach, you can start building a steady income stream that supports your financial goals. Start today and take the first step toward financial freedom.